The markets went down a lot on Friday, and I suspect this isn't the last time that we see such a decline in the coming weeks and months. But it doesn't necessarily mean that you should be worried about your investments or your long-term financial plan. If you have a financial plan with me, your financial plan anticipates these downturns and plans accordingly. When we put a projection together, we assume a certain rate of return. And if you look at the projection, it's a steady increase in your level of assets. But as you know, that's not what we call everyday occurrence. The markets are up and the markets are down. So you will not have the same rate of return every year. But over time, you know that the markets have increased a lot more than they have declined. So if we look 10, 20, 30 years ahead, you will see an increase in your portfolio that you need to meet your lifestyle goals. And if you're close to retirement, to make sure that your assets do not outlive you and you don't run out of money. If you don't have a financial plan with me, it is a good opportunity and a really good timing to sit down and create a financial plan to give you that extra assurance and extra security in your financial future. What I like to do is go over a few things that I have been doing as your financial advisor to make sure that you're still on track and you're not as affected by this volatility as you may be concerned that you are. I have reviewed the long-term allocation on your portfolio to see if you still have the right mix between stocks and bonds that you need. And if that strategy is right, which in most cases it is, then I would not change the strategic allocation. You would still be allocated in stocks and bonds in a way that meets your financial plan and also your horizon. If you're a younger investor and you have 30, 40 years before you retire, this is not a good cause for concern. In fact, this is a great opportunity to put more in the markets, to be more oriented towards growth. Because for 10 years, the prices had been rising and we had not had any bargains. Right now, there are plenty of bargains. So if you increase your investments, you will see that upswing. You will see those benefits over time. Underneath that strategic allocation towards stocks and bonds, there are opportunities. And I have taken a look at these opportunities and make tactical changes to soften the blow and perhaps to soften the declines. What has happened in the past year is value securities and value mutual funds have done really well. And there is quite a bit of research lately that has come out that value securities not only do well in the downturns, but also continue to do well when the markets go up eventually. So I have reallocated your portfolio, some of your portfolios towards the value securities, and any new contributions that come in, I make a conscious choice about some of the sectors and industries that are more resilient when the inflation goes up, when the rates go up, so that we make that allocation. And on the bond side, I've invested in, for some of my clients, for some of you guys, in floating rate securities, floating rate bonds, because there is a lot of instability in the rates, and it's tough to tell the direction of the bonds. But floating rate securities, for example, have flexible rates and they adjust pretty fast to the changing market conditions in the bond markets. Most importantly, we will be having reviews in October to update all of your information, to catch up, to make sure that we're still on track. In the next coming weeks, you will receive invitations to schedule your review in October from me and Ben, who has recently joined Quinvest. And also, we would like to ask you to update all of your information in Right Capital if you have it. We want to update your net worth, update your income, your life situation, so that we can have those conversations about the next coming year and make sure that we have a plan going forward. If you're close to retirement and you're concerned, is there a need for us to increase your contributions, whether it's a retirement plan or tax plan? Is it time right now to look into Roth conversions to increase your allocation to tax-free assets and get you more flexibility going forward? Is it a time to look at other strategies, whether it's social security, extra insurance, estate planning, whatever it is that we need to make sure that your plan is still on track, that we're well positioned for your future. So do look out for those invitations. Please pay attention. Please update your information in Right Capital and make sure that we have a date on the calendar to catch up and update your plan. And again, give you the confidence and reassurance to both of us that we are on the right track. In the meantime, if you are concerned and if you like to reach out, you see something in your statement that is of concern, that you have questions about, do not hesitate to reach out, and I will be proactively emailing you as well to make sure that if you need to talk to me, I am available and I'm here. I hope you're having a great weekend and the rest of your summer, which is short but sweet, and we will talk to you soon.